Hi, this is Alan Tribble, and this is my next video in a series of posts on the topic Business Management for Scientists and Engineers. This session is on pricing and focuses on understanding how to set a sell price once we understand our cost structure. In our last video, we saw how we could estimate both the total direct cost and total indirect cost associated with executing a government contract. In the case of direct costs, we could calculate an hourly rate for the different labor categories, and in the case of indirect costs, we would determine what percentage they are relative to the direct costs. Now that we know the hourly rate for each of our direct labor categories, we're ready to estimate the total direct cost. In this example, we've decided that to meet the requirements of the contract, we will need 100 hours of support from our financial analyst, 500 hours of support from our technicians, and so on. Multiplying the hourly rate for each labor category by the number of hours required gives us the labor cost for each labor category. Adding all of those together gives us the total direct labor cost of $237,500 as shown. Finally, we mark up the total direct cost by a factor that accounts for the portion of the indirect costs that can be allocated to support this contract. This is often called a general and administrative, or G&A wrapper, and in the previous example, we estimated that across the entire organization, the indirect costs were 33% of the total direct costs. So if our total direct cost is $237,500, 33% of that would be $78,375. Adding those together gives us our total break-even cost of $315,875. Now that we know our break-even cost, we're ready to add in our profit. It's typical that when you work for the U.S. government, you have to specifically call out your profit rate as a percentage of your cost. In this case, if we want to get 10% profit, we take 10% times the break-even cost, which would give us a profit of $31,587.50 as shown. Adding that to our break-even cost would give us the sell price $347,462.50. The previous example assumed we only had to charge labor to the program, but in most cases there will be other direct costs that need to be included as well. For example, we need to buy materials so that we can use them to build our prototype. I may have to subcontract effort to a subcontractor who has some special skills that we don't have internally. And we may need to travel to visit our customer or to visit the subcontractor. We can estimate all of those separately as shown here, add those all together to give us the total direct cost, in this case $342,000. I could add that same G&A wrapper of 33% to that, get me a new break-even cost of $455K, and now adding that profit rate of 10% takes the sell price to $501,285.54. If we understand our cost and we know how much profit we want, then setting the sell price should be very straightforward. Unfortunately, it's not quite that simple. There's often a difference between the price you want to sell the unit for and the price you can actually sell the unit for. Your customers get to determine the price you can get. Quite simply, customers vote with their feet. They leave and they go buy it somewhere else if they think they can get a better value elsewhere. If you price too low, you won't make much profit on each individual unit, but you might sell a lot. If you price too high, you won't sell many units, but you make a lot of profit on the ones you sell. Sometimes the best answer is in the middle. Find a price point that maximizes your total profit. Let's take a look at a simple example. Let's say that it costs you $1 to make a cup of coffee. Should you price it at $2, $3, or $4 a cup? At those prices, you'd make a profit of $1, $2, or $3 respectively on each cup sold. You'd have to sell 3 times the coffee at $2 a cup to make the same profit you'd make by selling it at $4 a cup. Note that a small change in price can have a large change in profit. If you raise your price from $2 a cup to $3 a cup, that's a price increase of 50%. But after you subtract the $1 it cost you to make the cup of coffee, your profit would go from $1 a cup to $2 a cup, a 100% increase. You may have heard the term, what will the market bear? Sometimes it comes down to trial and error. What are your customers telling you? If you set your price at $3 a cup and I have a sale and offer it at $2 a cup, what effect does that have? At the same time, if you have a price hike to $4 a cup, what effect does that have? You also need to look at your competitors. If they're selling their coffee for $5 a cup, raising your price to $4 a cup might still be a good deal. At the same time, if they're selling theirs for $2 a cup, getting even $3 for yours could be a challenge. Let's go back to the detailed example of the engineering firm that wants to build some new prototypes for the US government. We saw that the total break-even cost estimate was just over $455,000, and that if we added a 10% profit, the sell price would go to just over $501,000. We need to ask the question, can we win the work if we bid at that price? First, we want to ask the question, will the customer be able to afford that? If it's a U.S. government program, budgets are in the public domain. We may be able to find out exactly how much money the customer has budgeted. For example, if they tell you they've budgeted $500K, we may need to drop our profit below 10% to fit under that $500K cost cap. Next, we ask, what will the competition be likely to bid? They'd have access to the same budget information you would. If we think they're going to bid just under $500K, maybe we need to drop our profit even more and go in at $490K to increase our chances of winning. Just remember, we only make a profit if we win and execute successfully. So we have to think about which price point gives us the best balance between probability of winning and profitability. If you'd like any more information on any of the topics we've discussed so far, please investigate the 3 options shown above. First, you could buy the book. Both electronic and hard copies are available, and you can order those from your favorite bookstore or most of the major online retailers. Second, you could take the 2-day professional development class. If you'd like more information on that, please drop me an email at the address shown. Finally, you could subscribe to our new YouTube channel, BM4SE. Please tune in and look for future posts in the very near future. Thank you.